Welcome back to the Bitcoin Layer. I'm Joe Consorti. Bitcoin is down 20% this month, but finally it seems like we are out of the woods now. Bitcoin is up 3% on the day and climbing. ETF inflows on Friday were 170 million and almost 300 million on Monday. So on this Tuesday, we're taking a look at several of the factors over the last couple of months that have contributed to this underperformance in Bitcoin and why many of those factors are now flipping in Bitcoin's favor. And it looks like it's going to be a very good summer for Bitcoin, particularly as we head into the US election. So sit back and relax for yet another Bitcoin update here at the Bitcoin Layer. The first thing we're going to do is dive into a little bit of the global macro action. Of course, you know, we are a Bitcoin and global macro research shop. The other half of things really influences our favorite asset prices, and so we talk about it very regularly. If you're new to the channel, we're a Bitcoin and global macro firm. So a lot of what we talk about is influenced by this stuff. Now, what we're talking about today is something called the SAM rule. I'm going to talk about this briefly, and I have several other charts for you, but this is to kick things off. Now, what the SAM rule is, it's a historical recession indicator that essentially indicates when the 3-month average of the unemployment rate rises by 0.5 percentage points or 50 basis points off of its 12-month low, then a recession is beginning. This historical indicator has only had one false positive over the last 74 years since, back tested all the way to 1950. There was one false positive in 1959. But apart from that, every single time the 3-month average of the unemployment rate has risen by half a percentage point above its 12-month low, a recession has triggered. And where are we right now? We are within striking distance, if not right at that threshold of rising half a percentage point above the 3-month unemployment rate's 12-month low. So you can see here, back tested, this is basically when the unemployment rates, the 3-month average of the unemployment rate's distance from its 12-month low, and you'll see here every single time we hit this point, a recession occurs, and those are marked in red. Flipping over to this other chart here, you can see where we are right now. So in the pink is the 3-month moving average of the unemployment rate, which is currently at 4%. And the 12-month low, of course, going all the way back to July, is 3.6%. So we're about 43 basis points higher, not exactly 50 basis points, but 43 basis points above the 3-month average unemployment rate's 12-month low. This means that we are within striking distance of the SAM rule being triggered. Now, we'll know when the SAM rule is triggered and a recession is all but imminent. Again, this indicator has only had one false positive in the 1, 2, 3, 4, 5, 6, 7, 8 recessions, 9 recessions actually, 9 or 10 if you go back even further on this chart, that the SAM rule has accurately triggered. Of course, a recession is earmarked officially by 2 consecutive quarters of negative GDP growth. We aren't there yet. In fact, we actually had 2 consecutive quarters of negative GDP growth, if you'll recall, back in 2022 and 2023, but it didn't trigger a recession. And you'll notice that during that time, the SAM rule actually didn't light up. It didn't even flinch. It didn't notice it. So even though we had those 2 consecutive quarters, it wasn't a recession. But this indicator right here signals when the labor market is going from easing at the margin to it's really reaching escape velocity. After it reaches beyond this half a percentage point threshold, how you can think of it is these job losses in the labor market have reached escape velocity and the unwind is slated to continue, and that's going to translate into poor economic growth. We will know when the SAM rule is officially triggered. Again, we're 7 basis points away officially from the SAM rule being triggered when you start to see a huge move in tens. Obviously, another thing we track here at the Bitcoin Layer is interest rates, particularly those in the U.S. Treasury market. And the U.S. Treasury 10-year yield is the benchmark rate for basically all of long-term global borrowing. And as such, it functions as a proxy for growth expectations. Where do investors think the United States economy is going to go? Do we think it's going to decelerate? Do we think it's going to actually decline on net? Do we think growth is going to slow and fall? Or do we think the economy is going to grow? Are we slowing or are we growing? And right now, tens have basically been chopping around for this entire period that the Fed has been on hold. In blue here, I've actually marked the federal funds rate. So you can see as the Fed has stopped hiking and it's been on hold for this period, tens have basically chopped around in this range anywhere from all the way down to 370 all the way up to as high as 5%, right? Over here on the left side. by the way, is where the axis for tens is. They've gone all the way up to 5% and all the way down below 3.8%. That's the range they fluctuated in, but largely they have remained flat. So growth expectations have been pretty muted. They haven't made a move in majorly in one direction or the other, at least over this term. You can tell that in the third quarter of 2023, growth expectations really soared as the Fed was on hold. Reason being is when the Fed goes from tightening monetary policy to not tightening it anymore, that's like an easing impulse in the economy, because it means that, okay, the Fed's letting off the gas. Growth expectations really soared. And here the Fed has stayed because it wants those growth expectations to come down. Ultimately, growth expectations are very closely tied to inflation expectations. And inflation expectations influence price inflation. If people think the economy is going to grow, if they think that prices will rise, they'll go out and buy things today. That will actually drive price inflation up. Of course, inflation expectations aren't the only factor that influence inflation. Obviously, money printing is the biggest factor of them all, but investor behavior is something to factor in. And so when the SAM rule does get triggered, and we'll move into Bitcoin in just 1 second, but when the SAM rule does get triggered, we're 7 basis points away within the next 6 to 8 weeks, ostensibly over the next print, maybe by the next unemployment print, because of the direction that unemployment prints are going. The SAM rule will be triggered, and you'll probably see a very, very big trade in tens. People will be piling into the 10-year U.S. Treasury bill because they will want risk-free exposure. They move out of riskier assets. They move into things like treasuries. Chances are when the SAM rule actually gets triggered, thus basically portending a recession is imminent or a recession is going on, the beginning of a recession, then you'll see a much bigger move in tens, and these growth expectations will come down. People will start bidding tens, and you'll see them come down closer to, they're like at 425 right now. Over the last month, over the last 5 days, they have fallen 13 basis points. So there already is a pretty substantial move here that's going on, and we expect that once the SAM rule gets officially triggered, then the move to the downside in tens will be swift. It will be further confirmation of the deceleration in the U.S. economy, which we are already observing in other data. Investor behavior will finally reflect that. Tens will begin falling at the margin in line with falling growth expectations once it's very clear that we have reached the point of no return when it comes to jobs and the loosening of the U.S. labor market. So, moving into Bitcoin, this is the weekly change in Bitcoin's price, the weekly percentage change. Last week was the 4th worst week for Bitcoin since FTX collapsed in November 2022. That is a pretty big statement, okay? So Bitcoin fell by 7.5% just last week, and that is the 4th largest week-on-week decline in Bitcoin's price since FTX collapsed. And when FTX collapsed, it fell by 22.5%. So the other 3 candles here are Bitcoin declining by 7.9% back in April. That was just a small correction after we reached a new all-time high. You can see Bitcoin rose 21% in a week in order to reach that new all-time high. We had a small correction after that. It fell by 10.7% back in August before the bulk of this bull market began back in earnest last October when we had that huge run from the 20s all the way up to $74,000. And then over here, 22.5% when FTX collapsed. Now, this is a rather good sign for Bitcoin because, all things considered, zooming out, we are still very much in a bull market. 20% would be considered a bull market correction for Bitcoin. 10% in the stock market is considered a technical correction. Bitcoin being a much more sensitive asset, a move like 20% is really par for the course when it comes to investing in Bitcoin. And so seeing that we fell by 7.5% last week after 4 total weeks of negative price action, we fell cumulatively 20% since this time in June. Okay, so we fell from, and it's on my chart over here. So since the beginning of June, we fell from the low 70,000s all the way to as low as 53,000. Okay, that's a 20% correction, if not even more. You'll notice that over the last couple of weeks, the amount that Bitcoin has declined in percentage terms has been shrinking and shrinking, but last week it really puked. And what that tells me, now that Bitcoin's price action is once again positive, it's up 1% on the week, it's up 3% on the day, tells me that the biggest capitulation is already over, at least for this bull market correction. Now, everyone that has wanted to sell or any selling events that were going to happen, which we'll talk about in a second, have already happened. Most notably, two things. I'm actually going to share this Chrome tab that I have open. One thing that has been going against Bitcoin, a price headwind for Bitcoin, has been the German government. The German government actually sold a substantial amount of Bitcoin. So you can see here that they actually held around 42,000 Bitcoin, and they've begun distributing that. Now, today, 42,000 Bitcoin as of July 5th, 4 days ago. Now, and this is Arkham Intelligence, by the way. Great dashboard. Check them out for on-chain. Any crypto, but particularly for our purposes here at the Bitcoin Layer, a Bitcoin-only outlet, Bitcoin news. So this is the on-chain address corresponding to the German government. And they have offloaded a very substantial amount of Bitcoin, some 21,000 Bitcoin that they had accumulated that they came into the possession of just 4 days ago. They had begun distributing that to market makers and exchanges for ostensibly for selling purposes, right? And in US dollar terms, that is a reduction from 2.4 billion to 1.6 billion. So $800 million reduction in the amount of Bitcoin that the German government holds. That's a pretty huge headwind. And what did Bitcoin do on that day? It actually rose. So that's one headwind that is now out of the way for Bitcoin. Another headwind that was here for Bitcoin, but is now kind of moving past us. Well, it's actually actively underway. Another massive selling event is actively underway, and that is Mt. Gox. So Mt. Gox, obviously the redistribution of the recovered funds for all of the Mt. Gox creditors, the defunct Bitcoin exchange from all the way back in 2012 and 2013, has begun this week. So Mt. Gox moved 42,228 of the Bitcoin that they hold on behalf of creditors and begun redistributing that to creditors as part of a repayment process in both Bitcoin and Bitcoin Cash. Now, a lot of headlines have been circulating around these outflows being so huge and so substantial that it would crash Bitcoin's price. But lo and behold, at the exact same time that the repayment process has begun, Bitcoin is up. And so these two pretty major events, obviously there are other ones going on, but these are the two most substantial ones to take note of that are native to Bitcoin, have begun, have started, and Bitcoin's price is moving up rather than moving down. So that's very good news. When you have an asset and during huge events that would cause, during huge events of selling pressure, right? A lot of this stuff getting dumped, negative news coming out of the market. If the price of the asset is reacting positively, that tells you that this correction we're in is in all likelihood drawing to a close. When negative news and negative catalysts are no longer negative for the market price, that suggests to me, and it suggests to us, that chances are this correction has exhausted itself. All the people who were selling have sold. Another thing that further confirms this, and this really is just the nail in the coffin here, is that this last week was the largest week for liquidations in the futures market for Bitcoin. The third largest, actually, in Bitcoin's history. Not the largest, the third largest. So the second largest was back here in November of 2022, when the total amount of open interest in US dollar terms in the perpetual futures market fell from $8.5 billion to $6.5 billion, so a $2 billion reduction. Back here at the end of the last bull market, November 2021, from $14.5 billion in open futures contracts to $9.7 billion, so just under a $5 billion reduction, $4.8 billion. And this last week, which saw a reduction from $18.5 billion in open interest to 16, okay? So roughly $2.5 billion reduction here. So the second largest, looks like the second largest, I believe. Yeah, larger than the reduction in open interest during FTX, during the collapse of FTX. So, and prices going up. So very clearly, the capitulation on behalf of just normal spot buyers, the capitulation in the futures market, and the reaction from the spot price indicates to me that at long last, chances are this correction is drawing to a close, and we're going to see positive price action for Bitcoin moving into the end of the year. The final thing that really confirms this for me is ETF inflows, is investor behavior. So on Friday, ETF inflows into the 11 vehicles that are based here in the U.S., the 11 spot Bitcoin vehicles that trade on the U.S. stock exchanges, were $170 million. So $170 million in net inflows into the spot Bitcoin ETFs on Friday. and a whopping $300 million, or roughly $297 million in net inflows on Monday. This comes after a rather tumultuous a rather tumultuous month and some change, a rather tumultuous 6-7 weeks for Bitcoin. You'll notice a lot of net outflows from these ETFs as Bitcoin fell 20%, as it fell from this low 70K level here all the way down to roughly 61,000. But since the prices moved from the low 60s all the way down to as low as 53, ETF inflows have picked back up. On Friday, we saw 170 million in inflows. On Monday, we saw 300 million in inflows. This is once again very encouraging, and it's plain and simple that people are viewing value, deep value in Bitcoin in this $55,000 range that we're currently chopping around in. Right now, Bitcoin is about $57,500 at the time of recording. And you'll notice here that this is a very large wick at the bottom of this candle on July 5th, a very, very large wick. And that tells me that people really came in and scooped up this Bitcoin at what they perceive to be a low price. So the low at this wick on July 5th was $53,500, and it actually closed all the way up at $56,000. It had a high of $58,000. And so that suggests to me that people really are coming in and buying this dip. The fact that we had such a high magnitude of inflows from the Bitcoin ETFs on Friday and on Monday, it tells me that investors are expecting Bitcoin's price to go higher. Obviously, we saw a similar regime of huge net inflows prior to Bitcoin's price moving lower, but after a correction, after several weeks in a row of nothing but net outflows, to see 2 huge days of net inflows like this is very encouraging for Bitcoin's price moving into the end of the year. So in sum, right, a recession is on the way. It's right around the corner, at least as measured by the SAM rule. We're 7 basis points away from one officially being declared. Mt. Gox distribution has begun, and Bitcoin's price is stable, if not moving higher. The German government is distributing tens of thousands of Bitcoin that it owns. It's distributed 21,000 so far. It has 21,000 left to distribute, and Bitcoin's price is steady, if not moving higher. And ETF inflows have really picked up in earnest after several weeks of outflows. So these 3 things in a row, all happening in confluence with one another, yet Bitcoin's price remaining stable, if not moving marginally higher, is extremely encouraging. We've flipped into a time where bad news for Bitcoin is no longer bad news for Bitcoin's price, and that's very encouraging. It suggests to me that the bulk of the capitulation, if not all of it, is over, at least on net, and Bitcoin is slated to move higher as all of these negative events exhaust themselves, and Bitcoin basically is a clear runway for the remainder of summer into the election. Ceteris paribus, anything can happen, but these are the latest developments for you in Bitcoin and how we are viewing it here at the Bitcoin Layer. So that's everything. Thanks so much for watching. I really appreciate it. I hope you enjoyed the video. If you're watching this video on Twitter, make sure that you bookmark it and like it and retweet it as well. Follow this account so that you don't miss any videos. If you're watching on YouTube or listening on a podcast platform, make sure you like, subscribe, turn on notifications so you don't miss when we post a new video about Bitcoin and global macro, and keep it here at the Bitcoin Layer for everything Bitcoin and global macro related. That's all for today. Thank you so much for watching. Take it easy, everybody.